Some of the world's great financial centers are characterized by vibrant and adaptive regulatory regimes. And the great centers around the world, they're in constant dialogue with one another. And that is why we are thrilled to have with us today the Chief Executive of the Financial Conduct Authority, responsible for the financial environment of the United Kingdom and especially the City of London. Ladies and gentlemen, here's Mr. Nikhil Rathi, and he is going to be joined today by his interrogator, the managing partner at Tsunami Advisors and the chairman of the FinTech Association of Hong Kong, Neil Tan. Please welcome Mr. Rathi and Mr. Tan. Here they come. Knock 'em dead, boys.
Hi, everyone. My name is Neil Tan. I'm the chairman of the FinTech Association and also managing partner of Tsunami Advisors. Today we have a very special guest coming out of the UK, Mr. Nikhil Rathi, who's the CEO of the FCA. So Nikhil, welcome to Hong Kong.
Thank you. Thanks for having me, Neil.
Yeah, absolutely. So maybe what we can do is kick it off as far as the introduction of yourself and also talk a little bit about what the Financial Conduct Authority does inside of the UK market.
Sure. So the Financial Conduct Authority is the regulator for conduct, market integrity and competition for the UK financial services industry. We supervise around 50,000 firms, and obviously the UK also has a number of large global wholesale markets as well. Largest market for derivatives, foreign exchange globally. That comes under our oversight. And we're also very keen to sponsor and support innovation, which we'll come on to, I'm sure.
Yeah, absolutely. So yeah, I think obviously we had a number of different announcements here in Hong Kong as far as virtual assets is concerned. How is the UK actually approaching this particular space, from a regulator's perspective, and also how are you working together with Hong Kong to kind of develop this ecosystem?
Sure. So we have three strategy objectives. One is protection of consumers, integrity of markets, and promoting competition. And that underpins everything that we do. And to deliver all of those objectives, our mindset is one which is openness to innovation. So the FCA pioneered regulatory sandboxes. We now have had 57 virtual asset, blockchain-based companies coming through our sandboxes. We have advisory services for new companies, which we call innovation pathways, which have had 80 or so virtual asset companies coming through there. And that sandbox is open all year round. So openness to innovation, first point. Secondly, as you touched on, international engagement and cooperation. And it was great to see Julia here just now, and I was at the same board meeting she was at in Spain, where we were talking about how we can think about international standards here. Earlier this week, we launched a project with our colleagues in the Monetary Authority of Singapore, in Japan and Switzerland, to think about how we can crunch through the big policy issues on digital assets, around custody, around liability, international cooperation working together. Thirdly, we will always be rigorous on standards around money laundering and financial crime. And that's always been an area of discussion, but we're open to thinking about what the solutions could be there. And finally, the other thing guiding our approach is clear communications to consumers. There's real opportunity for innovation, for benefits, but also it's critically important, and this has been guiding our work on crypto, that consumers are informed and understand the risks. So we've just taken on responsibility for overseeing all promotions of crypto in the UK, and we've put a lot of emphasis on risk warnings, so consumers go in with their eyes open.
Great. And when we kind of take a look at your priorities and what sort of challenges that you see inside of the marketplace, how are you looking at this type of technology, especially the emerging policies that are inside of the UK?
So we see an awful lot of ideas, an awful lot of potential use cases. And one of the challenges we have is trying to work out where do we devote our resources and which ones do we really try to work through to see what is possible. So we have said recently that we're going to focus with our asset management sector on fund tokenization. We launched a discussion paper with the wealth management, asset management industry to say, in terms of all the technology developments out there, what is it we should really together focus on? And fund tokenization came up as number one ask out of that discussion. We are also in the process of evolving our regulatory framework for crypto assets. So we started a couple of years ago registering crypto asset platforms for anti-money laundering purposes. That's been a challenging experience. And we've implemented the travel rule in the UK, which allows beneficiary and sender information to be shared for crypto assets. We want to see that implemented globally. We're moving to promotions now, since the 8th of October, and then we have a broader consultation underway as to what the wider regulatory framework should be. Our government has indicated that for stablecoin wallets and custody, that will come under our supervision as well in the next year or so. And finally, we shouldn't forget about the payments angle. There is a discussion and engagement underway in the UK, like there is in Hong Kong, on central bank digital currency. And we are thinking and engaging on what that might mean for the traditional financial services industry, what that could mean for conduct, what that could mean for competition. So a lot of priorities, a lot of challenges.
Right. Yeah, so I mean, what's really interesting is that, you know, of course, before COVID, there was an agreement between the UK and Hong Kong. So we talk about the UK-Hong Kong FinTech bridge, and we're trying to reactivate that. So, you know, I guess, how would Hong Kong companies also look at trying to enter into the UK, and what sort of opportunities are there?
Yeah, I'm looking forward during the course of today and also this evening to meet a number of companies who are interested in the FinTech bridge. And we pilot these with a number of partner countries around the world. We recognize that for a lot of your businesses, the jurisdictions you're operating in aren't going to give you the scale you need to really make it a commercially viable enterprise. And actually, the real prize for a lot of the technologies that you are developing is the cross-border opportunity, the international scale. But with that comes friction. And what we hope through the FinTech bridges, partnering between regulators, partnering between the industries across the two jurisdictions, is to work out what those cross-border frictions might be and how we can tackle them. And so certainly I hope that that will be of interest to a lot of the innovative firms, all of you here. And we can see how, if I take, for example, cross-border payments as one example, there are estimates that for some cross-border payments, you could bring down the cost through some of the technology by 90%, which has the potential for literally hundreds of billions of dollars of efficiency globally if we're able to secure that. Tackling some of those issues together is the way forward.
Right. And then, you know, of course, generative AI is actually top of mind these days, right? So I think UK also is taking a leadership position inside of that space. Maybe you can talk a little bit more about what you guys have done inside of there and how you guys are looking at it.
There's a summit happening right now, a leaders summit happening right now in the UK, which is looking at the topic of AI, the huge benefits that are available to our citizens, automation, delivery of more productive services and more productive economies, but also recognizing that there are very significant risks. There are risks in terms of cyber, in terms of privacy, and in terms of market integrity. So I think we approached the question of AI humbly. I mean, it's been used in different forms, steadily increasing over recent years. Machine learning, algorithmic trading has been steadily building in markets and also in consumer-facing financial services. But now we see the ability to accelerate that, to combine that with mass computing power, quantum computing in the coming years for some quite disruptive shifts. Our approach has been to engage with the industry to understand what is going on. We have said, for the time being, we're not jumping into regulation here. What we have moved to in the UK is a much more outcomes-based framework for our regulation. So earlier this year, we put into place what we call our consumer duty, which was the most significant shift in retail financial services regulation in the UK for a number of decades. And that firmly put good outcomes for consumers at the heart of everything we do and everything we expect regulated firms to be doing. We have our senior managers regime, which holds firms, senior managers accountable for delivering the outcomes we're after. And essentially what we've said for now is we want to allow innovation, and we think as long as you're aiming for those outcomes, you have the data, the governance, to be able to pause things if you see that things aren't working as they should be. We're not going to get in the way of innovation. I also chair now the Digital Regulators Cooperation Forum in the UK. So we're bringing all of our digital regulators together. So ourselves at the FCA, our communications regulator, our privacy regulator, and our competition regulator. And we are together thinking about how we might approach this question of regulating AI, engaging with the big tech firms. And then finally, we have to have quite an open conversation about markets. Julia touched on it just now in her comments. You can see a world in which AI, automation of trading, which has already been building in terms of programmatic trading, electronic trading across multiple asset classes globally, where in periods of low liquidity, in periods of stress, that could amplify market moves, and that can happen across different markets and across the globe. And as global regulators, we need to think about what does that mean for market integrity, what does that mean for price formation, what does that mean for the definition of market manipulation, and how do we get ahead of those issues. So those are some of the things that are on our radar.
Right. And so when you talk about tokenization, I mean, right now, primary focus is really inside of funds, but where do you see this sort of trend going as far as tokenization is concerned, or RWAs and things like that?
And this is a really, that's the million-dollar question, isn't it? So we were talking about this just behind, off stage. We're seeing a lot of ideas, a lot of potential use cases, whether that's for funds, trade finance, digital bank deposits, settlements of securities. So far, you haven't seen mass market adoption or critical adoption, and I don't think I can predict really where this is going to end. But what we want to do is have a supportive environment to allow the innovation, to allow the testing, and make sure that where there are regulatory issues, we work through them, whether that's around understanding liability of issuers, making sure that those who have these digital assets have a proper claim, making sure that there is a proper management of conflicts of interest between the different parts of the chain. All of those things we can work through. And then really we have to see what the market wants to do. And which use cases get critical adoption.
Right. And stable coins and the other sort of like the progression in terms of the product propositions and those different things. What's your view in terms of like market development in this areas?
So much of the focus and so much of the interest has been around crypto. But actually you're quite right to say there's a spectrum here. And we've been quite focused on making sure the risks around crypto are understood. We can see the benefits, and we have a rigorous money laundering system in place. We have a rigorous promotions regime in place. But we're also going to be taking on powers to supervise stablecoin issuers and the custody providers of stablecoin. And we can see that as potential use cases. There is constant innovation in the use of money in the development of payments. You see PayPal Paxos stablecoin, which has some potential interesting consequences globally. And I think we'll want to make sure that we are providing the framework that enables those innovations to happen in a way which delivers sort of same regulatory outcome for same regulatory risk. So at the point that they become systemic, you can imagine the central bank is going to take a strong interest in it. But prior to that point, where perhaps you're dealing with stable coins that are not necessarily being redeemed at par, or they're being used for investment purposes rather than payment purposes, we'll just want to make sure that there's good clarity for the consumer and robustness in the infrastructure.
So I think that's great. I mean, I think key is how do you balance the innovation, but also competition, right? So or be market competitive or commercialization, right? So what are some of the sort of like key measures that you've introduced that kind of make sure that you're innovating constantly, but at the same time making sure you're safeguarding the markets?
I think that we aim to engage pretty openly with the industry and all the affected groups so that we can understand the kind of innovations that are being developed and thought about, and those firms that are engaging in that can also understand our perspective on risk. And we do that through different means. I mentioned the sandboxes, I mentioned our pathways. We run crypto sprints. So we did a significant sprint last year where we brought dozens of companies together just to talk about the questions around issuance and disclosure, custody, liability. What are the things that would worry us, as firms are developing and growing at scale. And I think if we can get in early and firms can understand why we are concerned about particular areas, they can then build that into the development of their products and the development of their technology.
Right, right. And so, if you kind of take a look at the trends, do you see an intersection between AI and also Web3 or blockchain coming inside of the markets?
I think all of this is coming. So then you can add quantum computing to that list, which is why in the UK, in our Digital Regulators Forum, one of the big things we do is look at emerging risks. And we're looking at that set of issues. We're looking at the whole question of online safety. We are learning as a financial services regulator on some of the issues, for example, that our colleagues in the communications regulator are dealing with on online child safety, where they've seen a prevalence of deepfake and other fraudulent behavior, and that can very easily be transmitted into the financial services world. So I think absolutely we see that trend. The other thing that we would see when it comes to AI, potentially, is you see the alignment of each of the big tech firms with certain leading AI developers and AI firms. And I think Julia talked about it earlier, the potential for concentration risk. And what does that mean if you have all of this data, all of these neural networks concentrated in a small number of firms? How do we think about that as a national regulator, as a sectoral regulator? How do we think about that globally? We'll be taking on, with our colleagues at the Bank of England, responsibility for overseeing cloud infrastructure providers and big tech firms with respect to financial services in the next few years for resilience purposes. But I think that's going to be a very significant issue for us to think about. How do we, as financial regulators, work with firms who are not traditional financial services companies, but are increasingly systemic for the financial system? Right, so non-banking financial institutions, those types, right? Non-banking, the big tech firms, the infrastructure providers, where traditional financial services providers perhaps don't have the same market power that they might have had over their third parties historically. Right. How do you guys actually work? I mean, coming from the FinTech Association, I think we've worked with HKMA, SFC on a lot of the policy and all those different consultations. How do you work and get the feedback from the markets, from the different associations inside of the UK on your legislation? It's a whole mix of routes, really. So we have a sandbox that's now open all year round, and we're learning by doing and learning what works and also things that don't work. So we have to be ready to fail as well. I've made speeches about failure as well as innovation and success. We have our natural discussion paper and consultation processes. We've run sprints where we bring a number of people into a room for a few days together and just say we can't leave until we've got a few solutions here. We have a lot of exchanges internationally as well. So lots of different routes, but we're always open to ideas if there are things that we could do differently or approach things in a different way. Right, great. And one final question, talking about the key trends. I mean, what's 3 to 5 different trends that you're tracking right now, looking forward in the next 3 to 5 years? How do you see this market progressing, and where do you see are the sort of pain points and where you can reduce frictions? So I think that we should never underestimate how much small reductions in friction, for example, in the payments world, can drive very significant changes in consumer behavior. So now in the UK, over 37% of payments are contactless. The move to mobile payments has delivered very significant shifts in the way payments are used at point of sale. And so I think that this question of how consumers wish to pay for services, how they wish to store their deposits, I think that could move very quickly. We've seen recently, for example, in some jurisdictions around the world, when they've seen banking turbulence, the prevalence of social media has made bank deposits much less sticky than they may have been in the past. And we could start to see movements of money much faster than has been the case historically. And that's important from a consumer protection perspective. It's important from a perspective of how the deposit protection system works and financial stability and banking stability more generally. So that's one set of issues. Secondly, the point I made earlier around the role of big tech, and how do we cope in a world where there's real asymmetry between the financial services providers and the infrastructure providers in terms of access to data and control of data, and increasingly data localization in some jurisdictions. How are we going to work as a global financial system which relies on global multilateral cooperation, free flow of capital, underpinned by free flow of data, when perhaps there might be some tensions there where data is held or sought to be held within national or regional boundaries? And we're going to have to, I think, confront that question as well.
Great. I'm afraid we're out of time, but thanks a lot, Nikhil, for coming out, spending time with us. And the UK-Hong Kong FinTech Bridge is reopened, so definitely explore that. Thank you so much. Nikhil, thank you so much for coming out.
Thank you very much.
Appreciate it.
Thank you. Thank you very much.
Yeah.
Thank you very much.